You know the rules, folks. If the baby's sleeping, we be quiet. 6 stocks to speak about in today's video. We're going to focus just on these stocks here today. Sofi, Fubo, Enphase Energy, RH, PayPal, and Palantir. We've got to focus on these stocks. Obviously, a rough start to the year here for these stocks. Sofi here today down 13+%. Fubo's down huge. Enphase down huge. All these stocks are down huge. Rough start to the year. So I want to get into what's going on with these companies. Do they have a very rough next few months ahead for these stocks? We'll speak about that. And we'll also speak about my feelings on these stocks for overall 2024. Am I bullish on them, bearish on them, things like that. So appreciate each and every one of you being here. Thank you so much for being subscribed, every single person. Thank you for being subscribed. Also in the comments section, if you own any of these stocks, let me know where you think these stock prices will be 12 months from now. At this time next year, if you own any of these stocks, you're interested in these stocks, let me know what you think a price target is 12 months from now on any of these stocks. I would love to hear from you guys in the comments section. Also, pin comment down there if you're looking to apply, join my private stock group in 2024, take your game up to the next level, then check that out. That'll be pinned comment, okay? So Sofi, it's been a rough start to the year here, right? Sofi down 13+% here today, just in the past 5 trading days, down like 17%. No bueno. So Sofi got downgraded by an analyst, and we'll speak about this analyst in just a moment, right? And so this analyst has doubts about if Sofi is going to be able to be profitable. He has doubts about their revenue capabilities. The analyst's view is that Sofi will generate only $2.3 billion in revenue this coming year, 10% below consensus forecast. He also believes EBITDA could be far weaker than where the rest of the analyst community is at on average, about 17% below estimates there. He says basically there's a lot more questions for Sofi than answers right now, right? And so there are more downside scenarios to this outcome than upside, right? That kind of sums up what this analyst believes. Now, in this analyst calculations, Sofi's EBITDA will be about $80 million less than what investors are expecting for Sofi for this upcoming year. The good news, though, is that Sofi can still get very close to profitability this year, even if the analyst is right? Which would be a big step in the right direction, right? Now, this particular analyst has people concerned, right? And I saw Amit tweeted this last night, who covers a lot about Sofi. Here it is. He says, this guy has an average return of 15% on his calls, 64% success rating, generally more bullish versus bearish, only analyzes banks, called Sofi top in August and initiated a sell, has a price target of $6.50, implying a 30% downside for Sofi from here. That was as of yesterday, obviously. It's much closer to $6.50 than it was at this time yesterday, right? Now, if we look a little closer into this analyst, where do they rank out of the analysts ranked on tip ranks? They're number 354 out of 8,665. So this analyst does rank very high, very high. 914 out of 36,000 plus experts, as they call them. That matters. That matters significantly, right? If it's because sometimes we'll see these analysts make this call or that call, and they're so far off, and they're such bad analysts, and they rank really low. They'll be like the 6,900th best out of 8,000 plus analysts. To be the top 500, I think is, something that makes you say, okay, this analyst has to be paid attention to a little bit. And I believe this is why that stock was down so significantly today. 13% plus move is because of this analyst's success rating in the past, and him basically saying this baby's going to 650. People are like, I got a chance to get out at 8 or 9. Let me get out of this baby, right? Now, here's what I'll say about Sofi, okay? First off, if the company does get to actual profitability in 2024, it's a huge moment for the stock, because this has just been a money loser, and people just look at it as it's a money burner, and you can't, no one really wants to own. I know people will argue about this. It's not a bank. That's what people will say. It's a tech company. At the end of the day, people group this into being a bank, okay? Whether you want it to be a tech company or not, they're still going to group it into kind of being a bank. And so no one wants a bank that doesn't make money. Like, that's just like almost like oxymoronic, as they would say, oxymoronic. Like a bank that doesn't make a profit? How's that even possible, right? And so they need to get to profitability. They have to get to profitability. This is immense, not just for all public companies, but especially for a company that gets grouped into being a bank, right? Now, what I'll say here is if these analysts are right, right? And let's say the company's trading about 22 times 2026's expected numbers, then I actually got to say SoFi is a great buy in 2024, if that's accurate. Now, I don't have confidence to say if that's accurate or not, just to be quite frank with you guys, but if that is accurate, SoFi is actually a screaming buy in 2024. So, once I have a stronger conviction in terms of where I think profitability will be in regards to stock, I'll probably be able to start making a move in regards to SoFi. I'm just still trying to figure out what are my EPS projections, because right now I don't feel confident in any EPS projections personally at this moment in time. But like I said, if this is correct, then SoFi is a screaming buy throughout the year of 2024, and every major dip in the stock will be a buying opportunity. So just a little food for thought. But once again, is that true? Are they going to really earn 40 plus cents next year? Okay. Next one up here, Fubo. So Fubo down big here today, down about 8 percentage points, right? Keep in mind, Fubo has been a very hottie. It's been a hottie, okay? A hottie stock. This stock's up about 66% in the past year. If you take it from where it was back in the springtime, it's, well over a double up from that situation. Now, in regards to Fubo, some huge news came out yesterday. No one paid attention to it, but this news was epically massive, okay? Fubo closes exchange of $205 million of existing 3.25% convertible senior notes due 2026 for convertible senior secured notes due 2029. Now, if you're wondering what the heck does that mean, this is just a massive major de-risking for Fubo. As the CEO, David Gandler, puts here, okay, today's exchange represents continued proactive management of Fubo's capital structure and improves the flexibility of our balance sheet, said David Gandler, co-CEO of Fubo, co-founder and CEO of Fubo. Furthermore, we have reduced our debt outstanding by approximately $28.3 million and have significantly extended a meaningful portion of our debt maturities out to 2029 from 2026. We are pleased to have accomplished these important objectives for our shareholders, right? I mean, this is massive. I couldn't believe that no one really paid attention to this. And it's funny. It's funny to start to this year because no one's paying attention to good news now, just like last quarter, no one was paying attention to bad news. It's kind of comical how the market works. But I looked at this and I'm like, this is one of the best news you could ever get in regards to Fubo. The fact that they just pushed $200 million of debt way out to mature in 2029 instead of 2026, that gives the company so much more wiggle room. It's not even funny. Such a breath of fresh air for Fubo. I was like, this is huge. I mean, the fact that no one looked at this, I'm just like, okay, do whatever you want. But this was almost comical to me because I'm like, this is epic, epic, epic. So in regards to Fubo, we kind of have a story here that year after year after year, the company's slowly being de-risked more and more and more. And if this company continues to bring down losses in a substantial way in 2024, it's going to get more and more over here for 25, 26, right? So now they pushed that debt way off to 2029, right? So I would say the company's kind of here now. They're bringing down their losses massively from where they were at previously. That trend should continue in 2024 in an epic way. I don't think they're getting profitability this year. That's one thing for dang sure. But I think they could actually get themselves in a position where in 2025 they could start eking out a few profitable quarters here and there in 2025. So I like the trend that Fubo's on here, and I thought, brilliant, man, brilliant. Push that debt out to 2029. You don't want to even have to worry about that anytime soon, right? Beautiful. Next one up here, Enphase. So this stock got obviously hit pretty hard today, down about 6.5% or so. It's down a little more after hours as well. Okay, so in regards to Enphase Energy, keep in mind there's some of these stocks that kind of just had a little bit of maybe potentially a dead cat bounce, right? And these are stocks that just perform great in kind of November into December. And Enphase is a perfect example of that. Stock bottoms at basically the beginning of November, and then it climbs $40+ a share into the end of the year, right? But keep in mind, it's just about literally every single stock in the market was climbing in November and December. So I don't think if there's a stock you find that has been climbing only in November, December, I don't think you can get too excited yet about those stocks, because that just feels like the whole market momentum's pushing everything up, so it's pushing everything up, right? And so that's just a little food for thought in regards to that, right? Now, I thought the move today in Enphase was pretty troubling, and the reason being is they did get Wall Street to come out and get their back today. Enphase Energy is maintained at buy by Mizuho. Mizuho actually raised their price target to $150 from $131. So the fact that Wall Street came out and, upped a price target here today, and the stock still moved down 6.5%, that's a little scary. Okay, if Wall Street would have came out and downgraded this baby, and they would have took their price target from 131 to 111 or something like that, I'd be like, okay, I can understand why Enphase was down 6.5% today. It was a bad day for a lot of stocks out there, plus a downgrade. It would have made sense. But the fact that they upped the price targets, $19 a share, that was a little troubling, to say the least. Okay, now Enphase is restructuring costs. They announced this back in December, right? So they announced that they're going to cut about 10% of their global workforce, right? Now I do have some questions about if that's enough, because you've seen some companies over the past year or two announce these sorts of cuts between 5 and 15% of their workforce. But many of these other companies I've seen, like for instance, a Meta, still have their revenues going up. It's not like their revenues going down. In Enphase, we got a very different dynamic. Enphase's revenues collapsing. This upcoming quarter, they're expected to report about 54% revenues down. The following quarter, about 54% revenues down. The following quarter is supposed to only be 39% revenues down year over year. And then they're expected to get down to the September quarter in 2024. They're expected to have only 6% decline in revenues, which we'll see if that happens. So I am wondering, should Enphase be doing more cuts, more reduction than kind of what they have planned for, right? I don't run the business, so I can't really tell you that, but it is something I'm curious about, because these aren't small numbers, folks. These are like end of the world type numbers for a company like an Enphase, right? And then I was looking at some Google Trends because I was kind of curious, kind of where Google Trends is at. Is it improving for these solar companies or not, or what's going on here? So I typed in like home solar, so a very popular search term on Google, as somebody would type in if they're looking up, to get solar for their home, right? And the terms obviously were not in a good place this past year, and it continues to be in a pretty down place here recently, as well as in the past few weeks here. If I type in like best home solar, right, which is a very popular term that somebody, if they're going to look for solar, they would Google something like that. We still kind of see a very troubling trend. This term peaked kind of around summer 2022, which makes sense because we had crazy high oil price at that time. We had crazy high energy costs and energy bills at that time, and there was just a lot of negativity around energy cost and people wanting to look for alternative options, right? And since that time, we've kind of been in a downward trend, and continue to be in this kind of downward trend here for somebody looking into getting a solar system. So I'm not sure how well this bodes for Enphase. When these Google Trends, whenever they do reverse and you see like a sustainable reversal, I think they'll be very bullish for companies like Enphase. But it seems like based upon kind of you could look at all these different kind of Google Trends metrics, it doesn't look like it's right now. It could change 3 months from now, 6 months from now, a year from now. It could be a very different story, and maybe people are getting much more into looking for solar for their properties and their homes. But right now, it's not so good, right? Now, the other thing with Enphase is we're only in about a 15-month downtrend for the stock overall, right? In terms of you can't really call it, getting back into a bullish move for the stock. But many of these sorts of companies had about 2 to 3 years of kind of a bust cycle before the stock actually bottomed for real and started moving up. So maybe this is a reliable bottom. Maybe we already hit bottom in Enphase and it starts to go only higher from here. But it just hasn't seemed very realistic from almost all these sorts of stocks in this category. This one just peaked a lot later than many other stocks in the market, right? Enphase was kind of a freak situation, a freak stock where, many other stocks peaked in October, November of 2021. This one peaked about a year later. So there could be a lot more damage here in Enphase. If you're somebody that's a long-term shareholder of Enphase, don't be convinced that we hit bottom in regards to Enphase. There's a potential there's another leg or two lower for this stock. It might not be, and maybe we did, but I'm just saying that, don't get too excited about that one quite yet, okay? Now, the one thing I'll say is if analyst numbers are correct, I think it could be an interesting buy in 2024. It's not trading the richest, right? It's trading about 30 times 2024 numbers, about 21, 22 times 2025 numbers. So it's not the most expensive stock by any stretch of the imagination, right? But we still got to see where the business settles out. The problem is revenues are going to be plummeting so much. We don't really know where the bottom is going to be. And then where's the bottom for EPS? And then when revenue does start to uptrend again, Are we talking about a blast higher, like revenues are going to start going back up 20%, 30%, 40%, 70% year over year? Or are we talking about a sort of situation where revenues are like, up 5%, 10%? Because you got to understand when you have a 50% plus drop in your revenues, like there's a long game of catch up to play there to get back to where you used to be. Not even to like a new level, just back to where you used to be. So this is all questions that honestly have to be figured out over the next 12 months, and we'll get a lot of those answers, right? RH. So RH got hit today, 5.6% down. And this is a stock I'm interested in getting in at some point in time. It's just, for a stock like this, I'm going to be very picky. With a lot of these cyclical type stocks, don't be in a rush to buy them. These are not Meta. These are not Amazon. These are not, all the other great companies, NVIDIAs and the AMDs and those sorts of companies. These type of companies are very cyclical. They go through a very hot spell for a few years, and then they downtrend massively. And you see epic crashes in their stocks. Certain companies that when you get a buy the dip opportunity, you better take advantage, because you miss it, it's gone. And it's gone forever. Netflix, Shopify, those sorts of stocks. These stocks, you can get a dip and then another dip and another dip, and it'll run and then it'll come back to you. It's a boomerang, okay? So RH, this stock is another perfect example. I kind of put it into like an Enphase type category where, it had a huge epic bounce November and December. Stock went from low 200s to, next thing you know, it was trading $300 plus at the end of December, right? Like, what an epic move. But feels like the whole market was pushing, so an RH has to push as well, right? Now, once again, no one paid attention to anything bad news in November and December. It all just got glazed past. But there was actually some bad news came out from several different things, okay? This came out toward the end of December. The CFO sold 33,000 plus shares, $10 million plus move. That's not a small sell, folks. A $10 million plus move in a company like RH is pretty epic for the CFO to be selling there at the end of the year, right? This one was maybe even more troubling. This individual's a director, president, chief creative, and merchandising officer. And they sold about 50,000 shares of RH for $14.5 million. I hope they go buy a new house with some new RH furniture with that money. Holy smokes. Now, the most troubling thing is, according to this, it looks like this individual sold the majority of their shares in the stock. Yeah, it's not something you really want to see. Selling the majority of their shares, that's not a good headline. So this is looking at the SEC. Once again, this is a director and an officer of the company. So that's like, double important. Let's just put it like that. And so it looks like they have still about 23,000 shares or so in a trust. But this is not a good look, folks. Not a good look. Because you got to say, like, what do they know? Why are they selling that heavily, their shares? Why would you be selling the majority of shares you own in a company unless you thought, there was real risk to the downside here? And I mean like significant risk, right? Now, when they reported their last quarter, let's be clear, this was a disaster. Revenue's down year over year. Guide was down. My gosh. They're starting to lose money in the business model. I mean, what a change. It's not a huge loss. They lost $2 million, but still, like, RH was a profit machine. The fact that they even losing money now is just like that's pretty wild, right? And then they blew through cash on their buyback. So the stories didn't magically get better for RH. It got worse. Check this out. This is the difference between October 2022, where the company's cash position was, and October 2023, their latest quarter they reported. They went from $2.1 billion in cash all the way down to $380 million in cash. Gary Friedman put the company in such a bad spot. The man's made a lot of great business decisions. This was a horrible business decision. Horrible business decision. This is pure greed of him being like, well, the stock's in the 200, 300 range. Let me buy a ton of shares back. It's a straight greed move, man. You run a high-end furniture business. We don't know when the luxury housing market's going to come back, Gary. We don't know that. You're watching this. I know you are. We don't know that. So to blow the company's cash wad on this buyback is insanity. Like, you took the company from a year ago being in such a great cash position that it was like, hey, if the housing market's bad for years to come, we're going to make it through just fine. We'll be able to invest in our employees, invest in new locations, invest in our brand. To now, What happens if the company loses money? What happens if this housing market doesn't come back? Maybe it will, and you're going to be lucky. But what if it doesn't? What if the luxury housing market stays extremely weak for the next 2 to 3 years? It's a potential. It might not happen, and maybe the luxury housing market goes booming over the next couple of years, but what if? And you've got to plan for those what ifs. And Gary did not plan for a what if here, and he put the company in a bad financial position. Here's the deal, okay? I was looking at some houses close to me and trying to see like what's going on with pricing, are these homes moving and things like that, right? Found this one here. This is kind of a new build. They bought the land for $4.2 million. Then they built the house, obviously. Maybe they lived in it for a little bit and then they wanted to move away, but they listed this house for $23,500,000, right? They just dropped the price on the 7th down to $22 million. Still no biters. And these are the sorts of homes that RH needs to sell. And the reason they need these sorts of homes is, if somebody goes to buy that property, they're going to spend $300,000 to $500,000 on furniture for that house. And when they go to spend that money, there's a decent probability they're going to go spend it at RH, right? That's a big deal. They need these sorts of properties to be moving. I looked at this house here, pretty close by. They listed at $3.2 million way back in February of 2022. Folks, that's almost 2 years ago now. Okay? Then they try to rent it out. So they listed it for rent here at nearly $19,000. Couldn't rent it. Now they're trying to sell it. They, put the price down to 2.9. This is a type of home RH needs to move because somebody's going to spend $100,000 or $150,000 in furniture on that house. And it's just no moving. I looked at this property close by. They listed it for rent. $50,000 a month they want it. They listed that back in October. Then they, put it for sale here at about $9 million. Then they lower the rent by $10,000 to $40,000 a month rent for that property. And then they just lowered price on it. You're not going to continue to get people to move down unless you're in a situation where you're getting no bidders. And it's like there's not much activity. If you're getting a lot of activity on these homes, you'll keep price steady because you're like, man, we got a lot of people touring it. We got a lot of people interested. You're not going to move down price. You're only going to move down price as if things are rough and it's like, dude, we can't get anybody through the door, right? This one, fairly close by. So this is a hilarious situation. They bought this house May of 2022 for about $2.5 million. Now, they're stuck in a situation where they need to dump it, right? They need to dump the property for whatever reason, right? But they listed it for 2.75. Now they're down to 2.65. They're not going to be able to sell that property unless they likely take a loss on it. They're likely going to have to take a loss. So mortgage rates are significantly more than they were at this time. So, I don't know what's going to happen there, but this is the sort of housing market we have right now, right? I was looking at this house, beautiful, nice. It's in a guard-gated community, beautiful community, very modernized home. They just lowered the price $200,000 on this property. Why did they lower $200,000? They're not getting bidders on these luxury homes, right? This bodes very poor for an RH. And here's the problem. Analysts had this company still making a ton of money next year. They have them, doing a little under $12 of EPS, which makes the stock not look that expensive at about 24 times 2025 expected numbers. But folks, RH could come in with half that. They could lose money next year. Analysts don't even consider it. The company just lost money last quarter. Who's to say they're not going to lose money in 2025? In 2024, right? Their fiscal year ends January 2025. But who's to say they can't lose money? They could. These are things that should be considered out there. That's all I'm going to say. And what about the other hot housing markets? Like, that were traditionally like the big, great markets for a company like RH, like San Francisco. Are properties moving in San Francisco? Not on the high end, okay? So a company like RH needs things like this to improve. This is a monthly business confidence index in the United States. And we're in a bad place, obviously. We're getting down to numbers we were pretty much back in Rona times, right? We need to see major improvement here in terms of business confidence. Because guess who's buying the high-end properties? Business people, okay? Look at this. This is a small business confidence index, optimism index, right? We're in a horrible place. A company like RH really needs these to start to improve. Because if these can start to improve, then people start feeling better about going to spend $2, $3, $4, $10 million on a house. And those are the, people that go to buy a $400,000 house aren't the people that are going to RH. to buy the $10,000 couch and the $5,000 bed and this and that. They're not. It's the people that are buying million-dollar homes, multi-million-dollar homes. That's RH's customer base. And so until that market really comes back and the confidence is there, RH is going to continue to be in a bad place, right? And so, we'll see how all that shakes out. I'm still interested in stock at some point in time, but it's a far riskier stock today than it was a year ago. And so I might get in it at some point in time, but I need it lower. I need it a lot lower because the stock's far riskier than it used to be. PayPal. So PayPal, big move down here today, right? 4.6% in regards to this one, right? Let's just call it what it is. The slaughterhouse is back at the moment, right? Sofi was down nearly 14 percentage points here today. Upstart was down 10%. Rocket was down 6.5%. Square was down about 5%. Affirm was down 6.6%. The Hood was down about 4.7%. And obviously PayPal down big. The slaughterhouse was back. I mean, if Fintech's going to get slaughtered like that, I mean, PayPal's just got no chance, right? Now, the one thing I will say is I would say there's a high probability that all these stocks are probably higher at this time next year versus lower. And I feel pretty confident in that in terms of Fintech comeback in 2024. But with that being said, it doesn't mean we can't go lower short term. These stocks are probably all going to be much higher at this time next year, but in the very short term, they could go lower, which, by the way, as still a buyer of PayPal stock, I welcome it. I do welcome it. I will say that. Now, by the way, I spoke extensively about PayPal in this video. It was one of the 7 stocks I featured on 7 Stocks I'm Buying January 2024 edition. So if you haven't got the chance to see that, definitely check out that video. I talk, like I said, quite a bit about PayPal in that one. Okay. Next one up here, Palantir. So this one's down about 3% here today. The stock's showing a lot of weakness here recently. And unlike many stocks that kind of boomed through November and December, Palantir bucked the trend. Which, remember, who do I always equate Palantir the most to? Like, what stock do I always talk about? It reminds me a lot of this stock. The stock is Tesla, right? And Tesla was always a stock that would just make its own moves down or up, regardless of where the market was going. Palantir does the same thing. The market could be all going up and Palantir is going down. The market could all be going down and Palantir is going up. Like, I've seen it all different type of ways. And so Palantir just reminds me so much of like Tesla back in the day before Tesla had its big boom. But we nearly hit the 15s here today. Stock got all the way down to $16.01 in regards to this one, right? Now, in regards to Palantir, here's the deal. People were waiting to take profits in this one. Like, there's a decent amount of folks that were just waiting for the new year to take some profits on this one because, believe me, I'm not the only one who's made a lot of money off Palantir stock. There's a lot of people that have made a lot of money off Palantir stock. Remember, at this time last year, think about this for a moment. Palantir was a $6 stock. $6 at this time last year. You don't think a lot of people have made money off this stock? Of course. And so naturally, some of those people want to take profits here at the beginning of the year. They didn't want to take profits in December because they didn't want to have to worry about the taxes coming up here. So they said, let me take profits in January, and then I'll worry about taxes. So that's how I feel in regards to Palantir. I think Palantir is still set up for a great year this year. A great year. I think every major dip in Palantir is a buy this year, as it was last year as well. But certainly, every major dip in the stock is a buy. Unless they don't come through with the numbers, but as long as they come through with it, they get back to those like 20% type growth rates or above, and they come through with the profitability, we're going to be looking beautiful for Palantir. Now, that was another one of the 7 stocks I featured on 7 Stocks I'm Buying. So once again, if you didn't get to check out that video, definitely want to check that baby out. Okay. One last thing I just want to talk about before I let you guys go is this is a AII investor sentiment survey. Okay, so the latest numbers that came out here was we actually had a substantial move down in terms of how many people are bullish on the market. We went from almost 53% down to 46%, which is a massive move down. We had kind of been on a big upward trend in regards to people getting more and more bullish, and now we had a pullback, which could mean maybe we reached peak optimism here in the short term, which is fine. We need this. We need the market to timid down. We need the bears to get loud again. We need the bears to say, oh, it's a crash. We told you guys it was going to happen. We need to set a bear trap here. We need, to get all those folks excited, which, by the way, I hope the market continues to kind of be in a troubled place because I have some puts I would love to rotate out of, just to be quite frank. But, we need the bears to get loud again, get confident again. We need the bulls to get timid again. We need to shake out the weak hands, and then we can make our next nice big upward move. But we need this. We need this kind of like flush out, because what we had in November and December, like that was just up and away. Wall Street needed those Christmas bonuses. We do know that. They needed to try to get their performance back somewhere in regards to the S&P 500. And they probably pulled it off. A lot of them probably pulled it off. They pulled a magic trick, but they do that many times at the end of the year. So I love this, and I hope we have some more of this downward pressure over the next few weeks, because I would love to see the bearish momentum pick back up, the bullish momentum kind of subside a bit. And once that happens, we can make our next major upward move, okay? All right, folks, appreciate you joining me, as always. If you're looking to access all my best courses, access my 6 and 7 figure plus Discord chat, access to exclusive weekly videos, access to see the moves I'm making in my nearly $2 million Fidelity account, then check out the pinned comment down there, fill out an application. We can see if we can get you in my private stock group here at the beginning of 2024. Much love, and have a great day.